Morning, everybody. It is 8:16 a.m. It is September 25th. Hope everybody had a good weekend. On the East Coast here in Jersey, it's been raining like 3 days in a row. Kind of depressing not seeing the sun, but that's what's going on. This market is pretty weak. Definitely oversold, but that doesn't mean anything. Market could keep going, right? Doesn't mean just because we expect a bounce, we should get one. But it's pretty oversold, but doesn't mean anything. That's just naming it what it is because it is. But got a key levels coming up in the Nasdaq, so we'll see. We'll see if that structure can break. Not sure. ES is broken the swing low, so we'll have to see what's going on. And now, without further ado, welcome to my channel. My name is Steven Gonzalez. Use market profile, volume profile, define structure in the market, along with supply and demand and gamma exposure levels, along with the most traded price of the rolling week, the month, the year. That just helps us with finding structure, right? Not just dependent on price. Structure is key. Okay, very key. Very, very, very key. And helps you stay on the right side. Okay? Um, we can get right into the watch list. There's tons of news to cover. Um, I have a little more time. My daughter's off this week, off today. So um, a little more time maybe to explain certain things. I was going to do a weekend recap, but I didn't have time. Did write a lot of things down. We'll get into that if we have time. Okay, of course, always subscribe and set an alert if you haven't already. And always, if you like what you see, you can give me a big thumbs up. That would help me out. And you can always follow me on Twitter, well, formerly known as Twitter X, at Gonzo719. And let's get right into that watch list. And let's see what we have going here. Well, the VIX. The VIX is up to 18, up 5.35. Remember, a 16 VIX is a 1% move. So today we should expect around that kind of move, a little over 1% in an 18 VIX environment. The dollar, slightly up. Crude is kind of flat. 10-year yield doesn't deploy to 820, which is in a minute. I suspect the 10-year yield will be higher with the bonds down, 30-year bonds down 1%. Gold down 0.08, silver's down 0.12, the Dow's but down 0.21, ES down 0.27, Nasdaq's down 0.33. The Russell is down 0.4. 30-year bonds are down over a percent. Wow. Ether down 1.88, Bitcoin down 1.92. Okay, so a lot of red here. All right, so let's move on. All right, as far as stocks, the leaders and laggards. Well, Netflix is up. Why? Because the Hollywood writers are reached a tentative deal, so that's given a little pop to Netflix, which is getting beaten down. Um, Amazon's looking to buy some AI, smaller company to help them with AI. That's getting a little pop. Besides that, we got to go to the laggards. All right, so um, Taiwan Semiconductor, they had some negative news. Their 2N and chip production is getting delayed, probably from 2025 to 2026, with construction delay. But that construction delay basically is because from lower demand. So that's probably negative for chips, right? And so that's sending Nvidia down 0.77. Now Nvidia has got a little bit of a bottom at 400, 405, 403. So we have to see with that. AMD's down 0.62. Coin is looking to acquire FTX Europe. So that's, with Bitcoin down a little bit, that could be having some negative effects on coin. They're down below 70 now. Coin. Tesla. Tesla is down 1.88. That's been getting beaten down. So Tesla continues to slide down 1.87. China had some the Hang Seng and all that went down today, so that's not good for all the China stocks. Are all not doing well today. BABA, after that big almost 5% move, now it's down 2.43% today, pre-market. Okay. Microsoft got an upgrade only from sell to neutral. From sell to neutral. So that's not a huge thing. Okay. What else do we have in the news? We got, we'll get into earnings in a second. That's all really that what I wanted to talk about there. Top sector stocks. Disney, probably with that strike, getting a little love, but that's about it. Laggards, Salesforce, Qualcomm, Cat. One stock that's been ripping, and healthcare is not even ripping. It's United Healthcare. That has been ripping. So check out a chart of United Healthcare. You see what it's been doing as this market's been falling. It's been getting bought. Okay. Let's let's see. Did I miss any other news? No. Okay. Sectors. Sectors. Um, there's not much of a leader here. All right. Energy is flat. And just to let everybody know, 10-year yield's at 4.5. 4.5. All right. So laggard, we have industrials, technology, in discretionary, and semis. They are rounding out the bottom of sectors. Okay, we can go right into news, which is there. I've already covered a decent amount, but let's get into it. Like I said, I have a little extra time. We can get into some overall market outlook if I have time. That's not what I wanted to do. Give me one sec. Give me one sec. All right, let's just start off with some news here. We kind of have a light week of economic calendar, okay, but we can get into some news. All right, we have like I already talked about, the Hollywood writers reach a tentative deal. Ford is still says there's significant gaps with the United Auto Workers union. Okay, that's what's been going on. There's the Amazon steps up ARS with $4 billion deal to invest in Anthropic, whatever you call it. And that's really it there. We can move on to here. We also have a possible government shutdown coming. It's a budget standoff ahead of October 1st. So that's also on the map. All right, crude is kind of like it's saying it's inching higher. It is, but I still interested possible in a crude short. Definitely overbought. The dollar is creeping higher, which is not good for commodities. I have to see. I'm going to analyze that chart again for crude. Now, as far as let's see if there's any financial juice here. Uh, Only thing I'm really looking at is the Chinese stocks were affected. Uh, they all did bad, so that's why the China stocks in the U.S. are doing bad. So, economic calendar today. We have Chicago Fed national activity. Then that's not really that. Dallas Fed manufacturing at 10:30. We had Fed Kashgari speaking at 6. New home sales tomorrow. Durable goods on Wednesday. Thursday, we have jobless claims. We have the Fed Goolsby, pending home sales, Fed Cook. The only thing of really that could possibly move the market is the core PCE, which is on Friday. Core PCE, which is on Friday. All right, so that's really, it's a little bit of a lighter week of major economic data. Okay, that's that. Now, as far as earnings this week, we have reporting tomorrow after the close, Costco. So you got Costco after the close. We have Micron after the close on Wednesday. Okay. We have Nike after the close on Thursday, and we have Friday. We have Carnival Cruise Lines reporting before the open. So that's the week on earnings. Okay. That is the week on earnings. So we can get right into some daily charts here. Boom, 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 boom. Let's go right in here with the daily charts. All right. I did a whole analysis trying to show, do my market recap, but I could, like I said, I have a little more time today, so I'm going to go into what I wrote over the weekend. Okay, definitely this is getting a little oversold here. But we'll just look at my express, right? My express chart here. And what I noticed, obviously, we broke the wedge last week. Okay, we're under the 10. We're under the 100 100 moving average. We closed under the August lows. Here's the August lows. Okay, we closed under the August lows. Okay, closed under the 10 MA on the weekly. So that weekly chart I show you guys at the 10 week EMA, we are below that now. Okay, we are below that. So that is very significant. Now, this low here, this little swing low here, is what I wanted to see us break, and I wanted to see if we could hold underneath the August lows. Well, we have. Okay, market closed down here. Okay, and if you look to the left, there's support here. Okay, so 430 is probably the last line of defense here. Okay, then you have a trend line here. So look around, and this also lines up with a previous monthly high. So around 423, we could possibly fall to. What's below that? 418. That's the 200-day moving average. Can that happen? It could. It could definitely happen. Also, 4,200 on the SPX. So the cash market. That's also, look at that. Right up here, 200-day moving average trend line. Right here, 4,200 on the SPX. Okay. Now, back to the Qs. All right, I'm sorry. Let's just get back to the SPY. See where we're at now. We're at 429.16. So let's zoom in a little bit. 429.16. 429.16. We're gapping down. All right, so this is a very interesting, okay, because this is a setup I like. When you sell off, sell off, sell off, gap, two sell-offs, and then you're gapping down, you're begging for a bounce. Does it have to happen? No, but that's typically what happens. Sellers get caught in the hole a little bit, take some profits, and you get a bounce. So that's one of my favorite setups. We'll see if that comes to fruition today, okay? And if we get into it later, I'll explain structure-wise why the SPY can fall. Okay? Alright. So let's look at the Qs and talk about structure. Now look at the Qs here. See this swing low? The Qs have not breached this yet. The Qs have not broken their August lows. Alright. If this breaks, well, guess what? The SPY is going down probably to the 200 moving average. Alright, remember, XLK, just talk about sector, which is tech heavy, which is the Qs. It's 28% of the S&P. So if this breaks, get ready for most likely 200-day moving average in the SPY. Obviously, if you ask, what if it holds? Right? So let's look what I wrote on the Qs. Structure not broken. Got a double bottom in the daily, right? All right. 343, 355. Very key support, okay? If you look to the left, you got a swing low, and then you have another this consolidation here and resistance and support right here. So it's very, very important level. Okay, very, very important level. Next level would be like 348 under here, this support. Okay, I can flash you really quickly my levels. There we are, see, 348. So we're breaking this trend. This is a long time trend line. You kind of hit the backside of it underneath the 100-day moving average. Okay, so very, very important level. Okay, 355, 350, 354. Very, very crucial level. Now, where are we at now? 356.90. 356.90. We are 356.90. We are gapping down. We're right about here, underneath the double bottom. So, will it break? Don't know. Like I said, structure has not been broken yet. So, can you see a buy point? Possibly. I don't know. Right? All depends. All right. So, let's move on. Let's move on to the triple-headed monster. Okay, and we can get back into maybe some other indexes later if I have time. So let's look at that. That was the obviously the daily charts. Not sure who's with me this morning. Hopefully everything's making sense with you. We can go right into the triple-headed monster. Let's talk about that because that what the heck's going on here? I'm sorry. All right, let's move on to the 10-year yield. That yield is just popping, right? I mean, this does not bode well for equities. The bond market keeps the yields rising. That puts pressure on all technology stocks, especially. Okay, so the bond market has been moving all the way back since May. So the bond market kind of told you we're going to get a little bit of a sell-off. There's been a disconnect. Okay, there's been a disconnect there. So, okay, so now the VIX has awoken big time. We were down at 12. Okay, we were down at 12. And boom, look at this. We're going towards last month's highs right here, 18. We're coming back to here. We just crossed the 200-day moving average. Okay, expect volatile market. Okay, expect a volatile market. So the VIX is alive. Ah, thanks, Kobe. The VIX is back. Remember, this is 30 minutes out. 30 minute. This measures a month out of fear. Okay. Now the dollar. Dollar's supposed to be dead, right? Oh, from this low here at 99, it's just been rising, rising, rising. So other currencies are getting sold, right? Particularly probably the euro and the yen, right? So this is gonna move up the dollar. All right. So we can make this smaller, right? But all that matters is this right here. Okay, this right here, 105.88. You can see once we made this move from about 114, boom, right? And look at this resistance right here, about 105.88. Hit it again, and then the dollar fell. So we're up to this level again. So let's just put this on the map right there, right? Coming up to that key level. Okay, so that could get rejected there, or if it breaks it and holds it, oof, we can maybe go for to 107, right? Let's see. Really have to see. Okay. Now we got that. We got that out of the way. So this expect volatility, boy. It's back. Volatility is back. All right. So let's go right into the volume profile, market profile. we're going to see here. All right, we're going to see structure-wise what we're doing. Okay, let's get my trusty marker out. This is where we look at structure. Okay. Okay. So, this is the ES. Okay. So we got double distribution happening now. Now this is rolling. So look, we have the distribution here is where we fell off, right? Where the market sold off from here. Still the most traded price. Still the most traded price of the week in the RTH session. Okay. This profile is basically 24 hours. So then you get the move down. So you got thin volume, which is going to have single prints there. Then we have a large distribution here. Okay, so in the 24 hours, 43.80 is the new most traded price of the week. I kind of like to watch the RTH, right? There's more volume in the RTH, so that should move down today. This should become the most traded price of the week, 43.80. Now, that's more bearish. Okay, that's structurally more bearish. Okay, because that means a move down and a hold. You know, you can call it a bear flag, whatever. It's a bearish imbalance in the profile. Okay, so if we keep building out volume here, typically you do one of these, or you come back and then you do one of these. All right, doesn't mean it can't be taken out, but it just means structurally it's bearish. You know, you have to say it's structurally bearish, even though we are oversold. You know, I don't even like using that term, but it's true. We are. So that's what's going on. Okay, so structurally bearish. That's true, right? Now, and we got a lot of supply, overhead supply, right? So now we know that most likely this is going to become the most traded price of the week. So this is going to become a very crucial level, 43.80. Okay, 43.80. Okay, so let's look at where we are in relation to Friday. All right, where are we at? So we're gapping down. So this is the gap. Okay, let's make this a little bigger here. We can just concentrate on the structure here. Okay. Okay. Okay, so we're gapping down. So let's just go over what we did on Friday. 43.99 was the high. Okay. It actually went right into the supply and sold off. Okay. So here's the low. So here's price right now, 43.49. Okay. Like I said, I like a setup like this. Really like it because oversold, 3 or 4 days selling in a row, followed by a gap. You know, psychologically, if you're short, okay, I'm not right now, but if you are, you're coming towards a big structure low in the Qs in NASDAQ. You might want to take some profit if you see that it goes against you in the morning. So that's the psychological factor. Okay, that's why I like it. Because I know if I was short and I saw that, I'd probably be like, you know what? Let me take some off. All right, this is a nice move. Let's take some profit. All right, so there's price. Here's the overnight high. Here's the overnight high. Well, look where the overnight high is. 43.80. Isn't that interesting, right? That's going to be our most traded price of the week. Okay, so that's very, very key. Okay, right to the tick almost. So we're gapping. And we took out a demand zone that was down here. There was a demand zone down here, like around here. Gone. So that demand's been taken away. All right. So we're gapping. Now, real quickly, what do we do in a gap, right? How do we measure the strength? Very easy. The strongest sellers will do a gap and a go. Second strongest will fail to fill the gap, roll over. Okay, this is real quick gap rules. Also can fill the gap and roll over. Okay. The only way you get the sellers on their heels a little bit is if you start moving back into the range. Well, that means that the selling is not as strong and you can move back into range. That's how you judge the strength on a gap. Okay. I will not participate in a gap and go. Okay. I need some kind of pullback. So that's how that goes. All right. So that's how you judge the strength. Now, I particularly probably will like to trade an equity or possibly the SPY or the Qs or the futures to if there's a reversal. Okay. If there is a reversal, this is kind of ripe for a bounce, not a bullish move, just a bounce. All right. So let's get into some scenarios here. Okay, so 43.80 is our big line in the sand here. Okay, it's going to be a weak high. Okay, the weak high just means there's confluence there because 43.80 is going to be the most traded price of the week, and it's also the overnight high. And it's also you would be taken out of supply zone. Okay, but then you got another supply zone. So, like I said, it's tough. It's tough sledding for a buyer. That's why the only way you want to get in is probably down here. Okay, so let's look at a possible bullish scenario. Okay, because this is my 3-day down reversal, gap down reversal. So what you want to see is you want to see that market gap and go. Boom, I want to see a flush. This will be very crucial. 43.50. This is the most traded price of the overnight. Okay, so you want to see a flush. Then in order flow, in like a footprint chart, okay, you want to see just a lot of people hitting that bid, hitting the bid, hitting the bid, hitting the bid. You can see it that more volume's coming in, they're getting absorbed, and then you want to see a pop above this most traded price, hold it. Then if you see some volume pop in, you're going to get a push. Okay, you're going to get a push. Now, your first probably little obstacle will be that gap fill. Okay, but that could send us right back into this supply zone, into 43.80. Now, I don't know how much farther you get from there because, like I said, this isn't a bullish move. It's just a piling on effect. It's kind of like selling, 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 selling. I mean, eventually they got to take profit. I mean, it doesn't go on forever. Okay, but this is key level, 43.50, that overnight VPOC. So people are shorting here. Okay, now the price is starting to recover a little bit right around that area. I love it to go down, get some liquidity down there, and then that holds. That could be a nice quick bounce. All right, that's what I'm saying. Bounce. All right. Now, other than that, I don't like a long because then it's not good. It's not a good trade. I mean, if you're not down here and you're up here, which could work, you got supply, you got more shit, but it's not good. You're going to be fighting shorts. So this is the only thing that I would be like, okay, cool. All right. Now look, it's starting to get some buying, right? So that is that, all right? That's really what I see now as far as a short. I don't love shorts when you're this oversold. That's why you need liquidity. Okay, let's say that move happens again, boom, and you get those longs in here. All right, let's just say you're like, hey, I'm not gonna get long. I like the short. Well, here's your chance. You go into this supply 43.80. Remember, that's the weak high. If we cannot accept above there and we start doing this, okay, I don't think now again, probability wise, could we just go and flush this out and go down to this naked VPOC at 43.30? Sure. I would say probabilities are we fail here, we probably go down here, even to Friday's lows, maybe even touched over, and then I think we start doing this. Okay, but I give you all scenarios. Okay, this is the big one, 43.80. Okay, that's the big one. Bears need to defend that. Okay, you do have another on up here. If they happen to take 43.80 out now, like I said, that'd be a tiny tip to the bulls. You have to deal with this supply with the most traded price of Friday. Okay, so you have a lot of supply. So this could also roll over, but see, then you have this to deal with. So I don't like that as much. You have to go through this 43.80, which is not going to be easy. But if you do, yes, you could fall again. Okay? So structure-wise, the market's bearish. Okay? Structure-wise, the market's bearish. All right. Hopefully it's all making sense. Okay? Hopefully it's all making sense. My man Colby, hopefully he's still there. Now we look at the Nasdaq together. Okay, let's look at our structure. Okay, this is why I love looking at structure. Right, I'm not looking at price. I'm not looking at, oh my God, we're down here. Doesn't matter to me. Right, that's the important part. We look at structure. What do we have? This is where the most traded price now. Just to let you guys know, this price right here is not only the most traded price of this year, it's the most traded price of a year ago. That's how big that level was. And I kept stating it on my channel that this oh, Colby, you made my day. You made my day. That means you're sticking with me, and it was probably gibberish for a while. But I'm hoping that I'm glad to hear that because I love it. When you can look at a structure, not price, it makes sense, right? It gives you a roadmap. That's why I love Marco Pro. It gives you a roadmap. I'm not just looking at candlesticks, right? I mean, don't get me wrong. I can look at candlesticks now and visualize a profile, but why not just use a profile, right? Just makes it easier. So anyway, I love to hear that, by the way. So again, similar to the ES, most traded price of the week up here, right? Then we have a lot of thin volume. This is the important part. Single prints, a lot of thin. Then a big distribution down here with some excess. Okay. Now, in the 24-hour chart, 149.50 has become the most traded price of the week. Again, look at that. Lines up right with a supply zone, just like the ES. Just like the ES, okay? It's very similar. The structures now they're not that different. They're not that different, okay? Same thing. Should move down to here. That will be a very important level. All right, that would be a very important level. All right, that would be a very, very important level. Now, I didn't talk about it, but inventory-wise, okay, we don't have an edge in this overnight. All right, equal long to short, that's not an edge. Okay, but we do have an edge in the gap down, like I talked about. Okay, so we have supply here, right? Structurally, we're bearish. Okay, this is going to become the most traded price. Price is here. Bearish. That's indisputable. I could say oversold, doesn't matter. The profile tells me we're bearish, right? I don't, it's not opinion. It's what the structure is telling me. See, that's what I love about market profile, volume profile. It is not my opinion. It's the structure that's telling me we're bearish right now. Doesn't matter if I think we're just going to reverse today and go to the bull market to the end of the year rally, right? Doesn't matter. So, all right, let's zoom in a little bit. We can get a little bit into this a little better here. All right, let's look at this together. Okay, same thing. It's no different. Okay, so let's look at this. Now, one thing important to note with the NASDAQ, okay? With the NASDAQ, we have a gap right here, unfilled gap. That's where the NASDAQ failed, right into this. It came into the gap, filled it a smidge, and then rolled over, okay? So we have a gap above us. Now, I maybe didn't go over that in the ES, but in the NASDAQ, we have a big gap above us, okay? Keep that in mind. Most gaps get filled eventually. So, all right. So here's our high. Here's our RTH low. Okay, price is here. We're gapping down slightly, just slightly. Okay, we have an overnight high, overnight low. Okay, so price is bearish because we're holding below the close, right? And look at these three lows here. These are weak. Well, this just took that out. So that even kind of promotes more that the market said we can't go much lower than this, and it's starting to recover. And again, this is just like for a bounce. Okay, this has been taken out. Now, the swing low that I talked about in the Qs in the futures was taken out. This was reached right here. That swing low. All right, we'll get into the a candlestick in a little bit, but this swing low was actually touched in the overnight. That's what this is. Hence why even more I think a bounce could happen. Okay. Now, we have our weak high here as well, 149.50. That's our weak high with supply. Okay. This is the bull bear line. Okay. Failure is bearish. You take it and you hold. That I would consider this more balanced to higher for a bull. That's it. Okay. Now, most traded price of the overnight is right here. I'd have to say most of these traders are shorts. Right here. Okay, so that's about 148.40. If this gets taken, right, that's almost by a gap fill. So you can almost go gap fill, hold, hold, hold. You possibly can get that bounce into supply back to this most traded price. Like I said, how much legs does that have? I don't know. But right now it's sell the rip. We're in a sell the rip environment. Right now, selling the rip is what's been happening. Now, what else do we have here? We have a weak high here. Right here. That's a weak high. You have a high and Friday's high, and then you have a gap above us. So if this gets taken, we could possibly start moving back. Now, what's to the right here? Very thin volume. That's not going to cause a lot of resistance. But that's ahead of myself. I'm just talking about structure. Okay? So very, very important to defend that for the bears. All right, let's get into it. It's going to be the same thing. It's not going to be anything different. Okay? Okay, so we know we just cleared out longs from here. That was just taken care of. Boof. And now price is here. Okay, so I still want to see push down. Now remember, an overnight low is usually not secure. Usually the RTH wants to come down and make a new low. So it's insecure. It's not secure. So I would like to see a gap down, push, maybe breach that low, start making some higher lows. This is the key right here, the most traded price to the overnight. If you can, boom, fill the gap, hold it, good possibility. Good possibility. You're coming back into the supply. Okay, possibly going up to that 149.50, which is going to be the most traded price of the week. That would be your move that I'd be fine with. Okay, because then there's a lot of supply. Okay, of course you can hold a runner. I'm just saying it's going to be tough sledding. It's going to be tough sledding. Okay, of course you can hold this and go here and then maybe take out this weak high and fill the gap. I don't know if that's in the cards. I don't know. Right, so that is that. As far as bears, same thing. Obviously, we can gap and go, we can fall. Well, that will fall without me, right? Just to say we move down, recover, like I said, then we come up here. Well, there you go. You see this failure and you cannot accept value here, you're going to probably come back down. Reach Friday's lows. And can you make a new low? Possibly. Or like I said, it's always you could start balancing again. And we wait. All right? That's really what I see. As far as scenarios, remember this is very key here. That's the line in the sand. Could you come up here and you could roll over here and take that out again and roll? Yes. Okay. Yes. All right. That's what I see. All right. Now, really quickly, just want to show you guys something. Structure. I always talk about structure. Okay. It's not as apparent in the SPY. Okay. Let's look at the Qs. I think it's more apparent in the Qs. Yeah, we can show you here. So here's structure, just like single prints or whatever. This is the volume profile of the last year, right, in the Qs. Just past the most traded price, right? So there's that double bottom. There's the next level. So we can, well, actually, I don't want to zoom in. I want to concentrate here. So see here, if we breach 348, okay. See these candles here in the volume? There is a little bit of a node here, but this could be taken out very easily and push us back to 321. It's not good structure. This isn't like you held here, moved, held here. This is very weak. Okay? So that's why 348 is a very important level. Okay? Now, I could show you something else, right, real quick. Same thing with semis. Look at semiconductors. Look at the profile. Look at this. This is a gap up, another gap up, and look where it is. It broke this major level of 143. 200-day moving average is right here. Look at this volume. This does not have a lot of support here. So you could see a fall in semis to 131. All right. Let's look at technology. Same thing. Now technology, 163 is the key level here. You see how technology is coming up to the swing low. See this huge level in technology? It needs to defend 163. If it does not, look at this volume. Look at this structure here. Horrible. It could bring us right down to 151. Okay. Now let's look at healthcare. Finally in this congestion broke lower, right? Broke a key level 130. Headed down to probably 128 possibly. Possibly. Okay. I'm just giving you the heavyweights right now. Okay, now one thing I want to note is discretionary. Okay. Look where it's at. 160, right? 161. Look at this level. Support, support, support. Look at the structure of discretionary. This is Amazon, Tesla, Home Depot. Look at this. Basically call these single prints, right? If we break and hold 160, we're going down to the 200-day moving average at 152. Now remember, this was on a roar. This was ripping. And look at this. Boom, 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 boom. Came right down, right? So now discretionary is also weak with technology, with healthcare. I talked about this in my video. Okay, I said financials and discretionary are fighting technology and healthcare. Well, discretionary is on the map of being weak. Okay, let's look at financials. Financials was in an uptrend, right? It was moving up, and then boom, boom. Now we're at under the 200-day moving average. Here's a good support, 33, right? So this is what I'm see how they're all coming to these key support levels. So the financials and discretionary has caught up with the other heavyweight sectors. So we're at a really big turning point. And one other thing that's stifling me a little bit is staples. This is usually defensive, right? When a market's usually defensive, you should see some pop. Look at that. It broke a huge level in 71 here and it's falling. I expect this to catch a bid somewhere, but look, I mean, maybe around 68. I don't know. Just interesting. Staples. You'd think that would be catching a bid a little bit, right? So that's what I'm looking at. Communications is probably the stronger of the sectors. Look at that. It only broke the 50, and it's just stronger with Meta, Google. Okay, it's not that weak of a sector, but it's not the heavyweight sector. Okay, it's just not a heavyweight. All right, that's just some of the things that I was mulling around here. Okay, so semi is very weak. Okay, semi is very weak. All right, so there's more stuff that I wrote from, and uh, I'll get into one other thing here before I go. So I want to show you guys this one thing here. Look at the Dow. It's heading towards the 200-day moving average. Okay. Crazy. If you want to see our economy, our real economy, small caps, look at the Russell. Look at the Russell. Jesus. Way under the 200-day moving average. Way under the 100-day moving average. It broke key support. I talked about this the week before. I said it could be a big move coming. Well, we're probably headed towards here, 172. Right? And I'll leave you with the RSP, which is the equal weighted, which the Magnificent Seven mean nothing in this RSP. Equal weighted, look at that. You see how the RSP looks like the Russell? It's the true representation of our economy. Look at that. Right here. Look at this. Boom. So, take out that Magnificent Seven. This is what our market looks like. All right. That will be it for me. All right. Hopefully, what I showed you enlightened you a little bit. Keys. Now, this is what I'm trying. What I want to express. XLK is at a key support level. Discretionary is at a key support level. The Qs are at a Q support level. Okay. That's why I think a possible bounce could happen. All right. If you enjoyed today, subscribe, set an alert. All right. I had a little extra time with you guys today. All right. Set a like. Set a like. Smash the like button. That will help me out. Colby made my day when he said finally starting to understand market profile. That's what I'm talking about. Because that was me one day. That was me when I was like this. Did I kind of get it? I'm not really sure. I don't know what I'm looking at. And then when it clicked, it was like, oh my God, I'm never not going to look at this ever again. I love it. Right? All right. Again, follow me on X at Gonzo719. All right. So everybody, we have a very, very, very clear plan today. Can we get that market bounce, that reversal? Right? Go right up to the most traded price of the week for the NASDAQ and the ES. Use the equity, do whatever, but that's really a nice setup. All right? That's a nice setup. So anyway, stay patient. I'll see you guys tomorrow.